Good evening, all. We'll start shortly. All right. So, welcome all for the weekly webinar of Week Ahead with Religare Technicals. So, as most of you know, that we talk about markets here, means the performance during the week, top sectors, weak sectors, and the top performers from the Nifty 50 basket, the top losers also, followed by our view on both Nifty and the banking index and some of these stocks which should be on your radar for the next week. So we'll start with a disclaimer first that it's an informational webinar. It's not a recommendation for any trading or investment. So before making any decision based on the information shared, please check with your financial advisor. Now, coming to the market performance. So good week means we could manage to extend the gains. The first week of July month, we ended on a positive note, roughly on 1.5% kind of a gains. As you can see on the sectoral front, all sectors on the positive side, with IT leading the pack, followed by pharma, media, energy, and financial services. And among the gainers also, you'll see that three names from the IT basket, Infosys, HCL Tech, and Wipro. Among the top five gainers from the Nifty 50 basket, and two names from the energy space, ONGC and Coal India as well. At the same time, there were three names from the banking and financial basket which witnessed some profit taking. So IndusInd Bank, SDFC, and Shriram Finance. But topping that list was Titan. So in fact, there are very few names which are left which have not participated in this run. Altogether. And Titan is one such name. In fact, whatever gains that we had, it has surrendered most of its gain in the recent decline. So Titan and Asian Paints, these are the two names which are still disappointing the street. Means, just to give you perspective about how the Nifty is faring. So out of 50 stocks, Nifty 50 stocks, 47, 48s are above their long-term averages. So that indicates that at least they're stable. Earlier we had challenges with ITC also, which is struggling around the same line, then SDFC Live. But at least these stocks have also stabilized a bit. But Asian Paint is one of the consistent name on the downside. Earlier it was UPL for quite some time, and nowadays it's Titan and Asian Paints. So that is enough for Titan now. Bharti Airtel also ended on a negative note. So this was the overall picture that how the week panned out. So overall, a good week. Broader indices also, they have performed well. It was, in fact, the outperformance was largely on the mid cap and small cap front, thanks to the noticeable buying in select themes like paper, railways, fertilizer, chemical. There's some themes, within the broader net which attracted noticeable interest. Now let's see where are we and what markets are projecting. So this is the daily graph. Once we exited this channel after this volatile swing, since then we have been seeing this gradual up move in the index. And why I'm referring to this particular chart is to show that there's not any decisive move. Decisive in terms of a strong green candle, means at least a percent kind of a move. So it's a gradual uptrend is what we are seeing index continuing with. What is the reason that why we are seeing this move continuing without any momentum is that across sectors, across the heavyweights, we are seeing rotational trend. You must have started noticing that once we see banking doing well, the IT comes on the back foot, or Reliance or ITC. So this kind of trend is continuing for quite some time. Today, in fact, on Friday, what was the trend? That HDFC was falling like 9 pence. At the same time, Reliance was holding the market. So this is what we have been observing for almost in this entire move. that select heavyweights. Earlier it was banking which was outrightly bullish, but now we have started, seeing this rotational trend within the sector also. So what we are anticipating, so couple of important things, that now two important events. One is our earnings season, other the union budget. In the next 15-20 days, we'll see volatility across the board for these two reasons. Banking, they have done their part. IT, like in the webinar, we discussed about IT, that we expect outperformance, and we have seen, tremendous gains from those levels, roughly around 8 to 10% kind of a gains in the index itself. FMCG is something which is still laggard, but we still have room. Then we have other sectors like, pharma, metals, auto, wherein we are seeing selective buying. But these sectors have limited weight in the index. So it comes to how the banking and IT and some of the heavyweights like Reliance from the energy basket and ITC from the FMCG basket performs. Indications are in the favor that market should spend some time after this recent move. So we were here around 23,400 to 24,400. We were eyeing a resistance at 24,500. Last week also, we made a high around 24,400. So now I expect market should spend some time around the current levels. And the good part is that this rotational buying, that would continue. So the trend is likely to remain positive. So we are not objecting on that part, that the trend is going to reverse or we are going to see sharp sell-off. But yes, this gradual up move might take a breather first, and then we might see an attempt above 24,500 for the index. And once we do that, then a new milestone, 25,000 mark. Downside, this yellow line, which we have been closely following, 20 EMA. So that will be the major, zone, that is 23,700. But before that, we feel that this zone, 24,000, that will also act as a support, since the tone is positive and we are seeing rotational buying. So for the index, at least, I feel that for a time being now, one should not take aggressive bet, look for buy on dips. This is positional levels. Those who have a time horizon of, let's say, 2 weeks or a month, they should follow these levels. Intraday, obviously, we are seeing opportunity every now and then. Like today also, the bias was negative in the last hour of the trade. Things completely changed. But positionally, I feel that one should not chase the market right now, especially the index. Stay stock specific. Focus on the outperformers within the sectors. In fact, we were seeing that stocks which were not participating it earlier have started participating, witnessing rebound, especially in the banking pack. We have started seeing some recovery in IDFC First Bank, RBL, Bandhan Bank. But it's not a good sign. This usually happens when markets are in the final legs. Once the performer have done their part, the second tier stocks, they have started performing, and then markedly eventually top. But I'm not saying that the market is going to top right now, but this is how it usually progresses. So as of now, don't chase when it comes to the index. Wait for some consolidation, wait for some dip. But in between, stock specific, we are getting opportunity across the board. There's no sector which is left behind. All the sectors are contributing. So focus should be more on stocks instead of sectors and themes, because we have budget around the corner. Now, let's talk about banking. So banking, after this outperformance, this week was slightly subdued for banking, as we all know that there was major part of the week was on the downside, and then we saw a single day recovery with sharp surge in HDFC, and that move fizzled out in the last 2 days. So again, this also indicates consolidation, but usually it is volatility remains high when it comes to banking. Being a 12 stock index. And since the earning is around the corner, obviously we started seeing the updates before the actual earnings. So that have also started reflecting in banking index. So for banking, we feel that one should not here, at least in banking specifically, that one should not be aggressive in the trades for the banking index. 52,000, 51,500, that's the zone basically where we have, multiple supports. So around that area, if somebody is looking for long trades when it comes to the banking index, that's the better area to look at instead of entering at the current levels where the risk reward is not favorable. Once we cross that mark, 53,000 mark decisively, then there could be a possibility that this momentum may extend and we'll inch toward 55,000 levels also. But if we talk about the indication from the private banking majors, the top 3-4 names, HDFC, ICICI, Axis, Kotak, indications are mixed now. Earlier, we had this indication that HDFC Bank has, ended its almost 2-3 year long consolidation, so it might continue with this positive bias, but it turned out to be otherwise. We are again re-entering into that zone. It's not that it has turned bearish like the way we were seeing the underperformance, but yes, there's a possibility that the momentum which we were seeing in SGFC that might subside, and we'll see the actual reaction post numbers, post results. So indications are mixed from the banking majors also. Earlier, we had a very clear indication when it comes to Axis and ICICI that there is a clear uptrend. We should look for buying on every day, but that's not the case now. PSUs, anyways, we are recommending to avoid. These second-tier banks that we were discussing, that RBL, Bandhan, IDFC First Bank. For the short-term point of view, I feel that we might continue to see the uptick in these names because they don't hold much weight in the index, and that is what reflecting in the market also, but be very selective in that space as well. So now this is about banking. Next, then where we should focus. So I feel that with important events ahead, especially earnings and this union budget, global factors are also there, but these two will continue to dictate the trend. Defensives, pharma, FMCG, IT, that should be more on focus. IT has already done well in the recent past. I feel that we still have room in FMCG and pharma. And Apollo Hospital we have discussed earlier also, I guess 3-4 weeks back. But we still have the potential for strong up move from the current levels. So Apollo Hospital is one stock which one can look at for fresh long for the next week, for the coming weeks as well. So as you can see in the chart itself, post the consolidation range breakout, a marginal dip toward the neckline area, a base formation around 5,800 mark, and now it's gradually inching higher. So in short, the risk reward is favorable. One can definitely look at Apollo Hospital for the long trades. Another name also from the defensive basket, that is Lupin. So the chart itself, explains that why we like this stock. So a phenomenal surge from 650 to 1,700, and then a complete tight range, very tight range, 1,550 to 1,700 for almost 3-4 weeks. And then finally we have this breakout this week with very strong volumes. So we expect this momentum to extend and stock to retest its record highs. So that's the second stock that we have on the list. And lastly, Marico, again a defensive bet. So post the consolidation range breakout, we have seen a decent retracement, but volumes are on the lower side. So that gives us comfort that it's a normal retracement, normal profit taking. Here again, it's offering an opportunity to enter those who have missed the chance earlier. So one can look for accumulation, when it comes to 15 days to a month time horizon in Marico as well. So just to sum it up our view, both indices consolidation is likely, trend is still positive, but stock selection now becomes the key because we have already seen very strong surge across the board. So to identify right set of candidate is more critical because index might not offer you clues like the way we used to have earlier. So until we break 24,500, this consolidation tone would continue in the index with 24,000, 23,700 being the major support zone. But in between, since we are seeing the outperformance for the broader indices, the stock specific move would continue, sector specific move would continue. Banking could see much volatile action in comparison to the Nifty index because we have other sectors which is supporting the move when it comes to Nifty. But banking can be slightly more volatile. So refrain from aggressive longs from the banking space. Private banking majors also, they are witnessing like volatile swings, be it the top private banking majors or the PSUs. So be very selective in banking space as well. Among the preference, we feel defensives should be preferred until we have clarity over the next trend. And within the defensive names, we've discussed about Apollo Hospital, Lupin, and Marico. So this is all from the presentation part. We'll do a quick feedback poll and then we can start with the Q&A. So please fill in your feedback and then you can start posting your question using that Q&A tab. And I request, so please restrict your questions to the sectors or themes instead of stocks because, it's become relevant for the other, participant also. And they can also benefit from that answer. So please use that Q&A button, Mr. Nitin, instead of using that raise hand option button. Thank you. So if you're done with the feedback, you can start posting your question that using that Q&A tab. Okay, so we can end the poll now and we can start with Q&A. Okay, first question on defense sector. So yeah, obviously because this is one sector which is not only, defying gravity, but, providing excellent returns. So this sector, Mr. Gautam, is mostly stocks are in uncharted territory, means they are at record highs, there's no resistance whatsoever. So if I name few from the list, whether it's Garden Reach or Cochin Shipyard, Majgaon Dock, HAL, BEL, BHEL, all these names have done exceptionally well. But since it's a uncharted territory, nobody knows where we are going to see this momentum pause. But yes, since the kind of momentum that we are seeing, usually when we see such kind of momentum, the reversals are also equally sharp. So my suggestion would be in this case, if you are chasing this momentum, be very disciplined with your stop losses. So put your stop losses in this system instead of having some mental stop that I'll exit once it crosses this. So that not might work. So it's okay if you are very disciplined in your approach. So then definitely you can chase because we don't have any stop losses because there was hardly any consolidation in between when it comes to all these different stocks. So the good approach is to maintain a very disciplined approach if you are chasing any of these names. Okay, next we have Nirmala ji on cement and steel sector. So cement and steel now they are largely taking a breather after a very strong move across the board. Metal largely was something mixed, so it's not that they have done pretty well, but Cement, yes, cement. Largely, all the big names they have done exceptionally well, and now we are seeing the. So, in fact, people were surprised. The move in the cement, especially before the monsoon, where uh, the all the activities takes a hit. But I feel that the reason was different, and we should not get into the reason wala part. The more uh, indication that what we have right now is that after this strong move, consolidation is likely, and that is what we are seeing. So expect a broad consolidation across the cement pack. There could be a day of up move or down move, but I feel that this up move for the sector, at least a decisive up move, is seems over. It maybe around the budget we again see some traction, but largely the kind of momentum that we were seeing, at least that you might not see anytime soon. So you should plan your trades accordingly. Now, steel sector also middle space is pretty much mixed, and largely because of the commodity prices in the international market. They are all also taking a breather. So that is what we are reflecting in our metal stocks as well. And similar to cement, uh, steel, or other metal related stocks, they might continue to hover in a range. Selectively, yes, like stock like JSW Steel, Jindal Steel, those who are high beta in the nature in this particular basket, they are holding strong, and they might continue to outperform. But it could be largely due to the earning expectation and the other reasons. So be very selective in this space. Unlike cement, we may see selective movement in steel space. Okay, next, Mr. Gupta. So thank you, sir, for the informative session. Thank you, Mr. Gupta, for the feedback. Now, question: why FMCG is not performing as expected? And good monsoon, government focus, everything is there. That is true. So usually, we all believe that market is a discounting mechanism, works on discounting mechanism, and we usually see the stock performing before the actual anticipation. So that we have already seen. I guess one leg, the up move in FMCG counters was largely because of that, because we were anticipating good monsoon and there'll be a focus on government to increase consumption in budget and the other aspects. But I feel now market will be closely watching the actual numbers. So I feel that if I talk about safety, still I feel FMCG are comparatively better bets to look at if you are risk averse. Because HUL, we are not going to see any major decline, at least in the near future, is what the indications are. Similar holds true for ITC. So they might not outperform the market, but they're not going to underperform either. So I feel that you'll continue to see the movement based on the earning announcement. But yes, the potential of up move is still there. Okay, next we have Rakesh on fertilizer and capital goods. So fertilizer, again, I feel that the one leg is over. For the next leg, again, we may see selective participation. So be very selective in this space, because we all know that they are cyclical in nature. So as and when we hear some announcement around this, rural push and other things which start floating around the budget, so that push the momentum in these names, and then they go for a long period of lull phase. So be very selective, and it's just a theme. I feel till budget. After that, they might again go sideways. In fact, before the budget itself, we usually see that they take the last, uptick. And once the budget is over, or in fact before 1 week before that, they usually start, declining. So I feel that be very strict with the stop losses in fertilizer, and stick with the top names. Don't look for the high momentum names which we seeing earlier, though the good names, they were also seeing momentum, but like stock like Chamber Fertilizer, wherein we have consistency in the trend. The top names like Cholamandalam, all these names should be preferred. In capital goods space, I feel that still we are seeing traction uh, overall, but again, like Siemens, ABB, L&T, they might spend some time around the current levels, but it's going to be more of like a broad base trading range that they might continue to trade in. So I'm not expecting outrightly a directional move in capital goods space. So if you wish to play a trend, then you can continue to look at it. Otherwise, you may avoid. Okay, Mr. Nitin Agarwal has question on defense and insurance. So defense we have already discussed. Insurance, yes, this is one which you can add to your list. I feel that after a long period of underperformance, like we were discussing at the beginning of the presentation itself, that apart from Asian Paint, there were certain names which were struggling to cross the major averages. SDFC Life was one among the those names. So that has at least surpassed that zone. And if I have to prefer, among the insurance names, then SBI Life, then ICICI Pru, then SDFC Life. But yes, this sector has potential. So again, I would request not to please post stock-specific questions so that we can end this webinar on time. And we have already answered about defense stocks, so I hope it answers your query. Then we have Mr. Athar also. So we have discussed about metal in detail. So okay, next Mr. Sunil has question: how to find the next day will be range bound or trending or volatile for the index? So, Mr. Sunil, the easiest way to find out is to next day means before the at least the market opens, we share our newsletter, which is available for free. If you are not associated with us, you can join our Telegram channel, Religare Broking official Telegram channel, and where we post our daily newsletter before the market opens. So from there, you can have this view. To analyze on your own and to do this multiple permutation combination, which we have to go through, be it the charts, derivative data, and other aspects. So I feel the easiest way is to follow our report. Okay, so Mr. Rajesh has question which we have already covered largely, that cement, insurance, pharma. Also, we've discussed that in fact most of the names in our list today was more on the defensive side. So pharma, in fact, if I'll exclude a couple of names which are not participating much, majority, in fact, there's only one sector wherein we are seeing broad participation. So Lupin, Sun Pharma, Dr. Reddy's, Deviz, granules from the mid-cap pharma space, Biocon, they all are doing well. So pharma is definitely, at least for the next week or maybe for 15, 20 days, we'll continue to see this outperformance continuing. Okay, so renewable space, Mr. Chaudhary, I feel that again it's very thematic, and as and when we hear some some news around this, so we see that stocks start witnessing traction. So, but again, it's not sector for a short term, means you can't time it. So if your time horizon is, let's say, for 4-5 years, then definitely you may stay put. Otherwise, one should not look for entry and exit opportunity for the short-term intervals. Okay. So, Manji, we have already discussed about the defense, railways. Yes, railways we missed. So railways again, like despite a very strong outperformance, we have started seeing traction again in the railway stocks. But be cautious. Again, I'm saying this for all the theme-related stocks before the budget, because usually they top a week before the actual budget announcement. and this is a past trend. So if you go back and see how the fertilizer stock or sugar related stock or agri related stocks and the other themes, they usually top around that. So within this space, IRCTC is definitely an exception because it has not performed in line with the other railway counters. So yes, we still have room, but other railway stocks, they are seeing momentum, so similar to what we are seeing in defense. So if you are very disciplined, you can place hard stops, means placing your stops in the system itself and not altering with your stop losses. Then only you should look for chasing those momentum. Okay. Mr. Gopal, yes, we feel that market are slightly overstretched, and that's the reason why we said that one should not chase index at current levels, and one should wait for a dip. 23,700, 24,000 zone is what we believe is the next major cushion for the index. Okay, chemical sector, Mr. Chandra, yes. So this sector is also have started, witnessing traction. In fact, the momentum has subsided a bit of late, but the tone looks positive. So we feel that one can stay put in chemicals, just like FMCG and IT, which were the laggards earlier. We still have room in chemical also, where we have started seeing traction of late. Okay, so thank you, Mr. Gupta. And next query on infrastructure. So infra is a very broad term. Infra includes everything, means your capital goods, your metal, and the other related sectors. So I feel that now it's time, since we have the earning season also scheduled, right? Just don't go by some hearsay, like that government may announce something in infra, so let's start buying something in infra. Everything is discounted in price largely. So when it comes to infra, we have certain pockets. Again, we have to be very selective. So if you are associated with us, we pick and choose those stocks for you and share it during the live market hours through our products also. So in infra space also be very selective. I feel that in metal space we have room selectively. Then the capital goods of space also we've discussed about, we could see some broader consolidation, but the tone is positive. So selectively, yes, we can still pick and choose when it comes to the infra space. All right, so with this, we have answered all the queries. Largely, yes, there were certain questions on stock specifics, so we have skipped because we have largely answered it during the sectoral, when we discussed about the sectors. And yes, so thank you everyone for joining in. Next week, same time, we'll connect again. Till then, take care. Thank you.